inflation out, we hone in on a business that's driven chiefly by domestic consumer spending. SM Investments Corporation says it is expanding the footprint of its convenience store unit, Alfamart, this year, taking on the Philippines' industry leader, 7-Eleven. Alfamart had a total of 2,100 stores as of end 2024 and plans to expand further this year. Alfamart is a joint venture between the SM Group and Indonesia's Alfamart, a company with over 16,000 stores in Indonesia. With us now for more is Alfamart Trading Philippines Chief Operating Officer, Harvey Ong. So good to hear you, Harvey. Welcome to the program.
Thank you for the invitation, Kathy, and magandang umaga to all your viewers.
Magandang umaga. So you've heard from Juneri, inflation for April came in at 1.4%, even better than forecast. It is the slowest since November 2019. I don't know if you remember those days. You were still building your stores then. You were probably less than 2,000 then. What do you make of the result?
I mean, great news for Filipinos in general, and in particular to Alfamart shoppers. We cater more to the lower CDE segment of social demographic class. No? So this is a welcome relief for them. 2024 wasn't a very good year for us. We did well in terms of the expansion. We opened 400 stores. We opened a new DC. And foot traffic continued to grow, but the basket size was quite constrained. For the first time in many years, basket size did not grow, and this was mainly because of inflation, rice inflation in particular. So the news is very good, and we're seeing some improvements already this year, 2025, compared to last year. We're starting to see modest growth on the basket size. So I'm looking forward to a good year for Alfamart this year.
That modest growth in the basket size, is that in any way impacted by the midterm elections? Because election years typically bring in a windfall for consumer-driven companies.
For us, if we compare it to the previous elections, actually election spending tend to benefit more the big box stores, not so much the small box. So we attribute it more, Kathy, to rice in particular. Although rice is around 10%, I guess, lower than where it was at the peak of 2024, it's still a bit higher than 2023 levels. But still, this reduction in the price of rice enables the shoppers to buy more in terms of their assortment.
I'm really curious, what are they buying? If there is a modest increase in the basket size, what are they checking out in your stores?
Ulam. So we're seeing very robust sales of our frozen goods, our chicken, our meat, seafood. They're all doing very well. So I attribute this solely to the slight reduction in price of rice.
Right, and it's frozen meats, isn't it? I mean, they'd rather go to that neighborhood store where they can get it quick and then put in their fridge or maybe their freezers so it doesn't rot, given the high heat index. I wanted to ask you about the supply chain, though, and the impact that so far had between you and your international suppliers, since you've also got a partnership in Indonesia, since Trump's Liberation Day tariffs, the tariff pause that we have until July, and the 10% baseline tariff for mostly all, including the Philippines.
Our supply chain is independent from our parent company in Indonesia, but we have been talking to our top 30 vendors in the last 2 weeks. So far, none of them have any position yet in terms of the impact tariff would have in terms of their supply chain to the Philippines. At any rate, Alfamart, we have anywhere from 45 to 50 days inventory in our stores, in our warehouses, plus our key suppliers have around 30-45 days cover as well. So I think whatever happens, and really, Kathy, I don't know what's going to happen because things kind of change on a weekly, daily basis, but we're going to be covered in the next 3 to 4 months at the very least.
Well, on the group level, your parent knows what's going to happen. They're keen on overtaking Alfamart's biggest competition, 7-Eleven. So how are you coming along with the store openings and the collaborations to get that going?
Well, I think to dispel the perception, I don't really see 7-Eleven as a competition, mainly because we kind of serve a different segment. 7-Eleven is usually found in the commercial areas. They serve the working professionals. We are really more catered to the subdivisions, to the residential areas. We are really less of a convenience store, but more of a compact supermarket, actually. So our assortment is broader, and you see a lot of things that you won't find in a convenience store, like frozen meats. And our prices tend to be closer to the supermarkets as well. That being said, our expansion is doing well, coming from a very high base last year, our 10th year anniversary. I think this year we should be opening close to 300 stores, but we will also take this opportunity as well with a lot of stores hitting the end of their lease. We're reviewing whether we're going to review some of these. We're going to renew some of these stores. As we have opened a lot of stores, some of them are already very close to the older stores. So we may take this opportunity to rationalize some of these stores, maybe looking at 20, 30 stores this year. So we expect to close at the very minimum 250 net new store openings for the year. That'll be 300 new stores minus at most 50 stores that will be rationalizing.
All right. Well, it helps to have a clear business strategy at a time of uncertainty. Thank you so much for joining us. Harvey Ong, the COO of
Thank you, Kathy.
Alfamart Trading Philippines.